Waking Up Today. Joining me is Todd Bubba Horwitz here to talk about a hot stock of the moment. Has to be Apple. Unbelievable. Good to have you back here.
Good morning. Great to be here.
I know you have a lot of thoughts about this stock, and it is so widely held. So many people love this stock, and there is a time to sell this stock and a time to buy and a time to hold on. What time is it right now?
If you have it, it's time to hold on, but it is really hot because Samsung's on fire, so it's really helping push up the Apple stock. I think this is more of an artificial bounce up here, and I think that I'm not looking to sell it. If I own it, I would protect it, use a stop, whatever. But I believe that Apple over time has become more of a regular company like an IBM and what Microsoft used to be, which is not very innovative. They've lost a lot of their edge in bringing out new products that are exciting versus just bringing out the same old iPhone, a little bit updated. So they have a lot of work to do internally, although they're strong cash, they've got a great company, but overall they need to do some work if they really want to grow and you want to see the kind of growth we've seen in the past from them.
Would you use a covered call strategy if people already own this stock?
No, I would never. To me, a covered call strategy is probably the worst strategy in the history of mankind. You give up the upside, but you have no protection of the downside. The best way to use this strategy, if you want to protect the downside, is to maybe use a call spread on top. So if it does continue to go higher, you lose a little bit on the call spread, but once it goes through, you start making money again, and maybe buy a put or use a ratio spread behind it or underneath it to protect the downside. But the covered calls are a terrible strategy, just in general. They don't give you any protection, and they don't really generate enough yield anymore either.
That's why we have our show, lots of opinions. All right, how high will Apple go? I mean, do you have a target price in your mind as a trader where you think the stock could go?
Well, personally, I think it's within $1 or $2 now. I think 118 is a pretty wealthy number here, pretty rich up here. I would be, as a trader, I'm going to be looking to sell Apple here as soon as I can feel that the top is in. I can't commit to that yet because we've seen gap up on Monday, gap up on Tuesday. So I'm not going to try to figure out where it is, but when the market starts to show me and the market will leave a little bit of a footprint, then I will look to start to sell it. And that could be here, maybe a little bit higher, but somewhere in this area I think is probably a pretty good area.
And it's always good for the general public to know because sometimes the public tends to sell too soon or buy at the wrong point when the stock is flying.
I think the biggest problem that the public has is we turn investments into trades because they move so fast. We want to take the money so fast, and then we take trades and we turn them into investments because they went against us. I think try to let the things work as long as you can. If you use a stop, and Apple was at 112, and then it went to 115, put your stop at 113. Then it went to 117, put your stop at 115, and continue to follow it up instead of trying to pick the top or the bottom. Allow the markets to work for you instead of against you.
Apple also pays a dividend. All right, let's move on to something else that you're watching here, and that is gold.
Yes, I am.
What do you see as a play here?
Well, I think gold has obviously been just absolutely trashed over the last couple of weeks. I mean, we've got an exceptionally strong dollar. There's a lot of things going on within the Fed about what they're going to do, and the dollar is really starting to spike, reaching levels of, upper level we haven't seen for quite a while. I think that they've overdone it in gold. Now, we could go out and just buy regular gold or buy the GLD ETF, but I think there's a better play here. I like the nugget space, which is, I typically don't play these triple leverage spaces because I don't think they're not real good in the long term because they kind of decay like options do. But for a short-term play, which is all I'm looking for, we've got the FOMC minutes, we've got other things happening. I look for one quick run up, and you can buy this stock somewhere in the $11 range. I think it has a great chance to go to $15 or $16 in a couple of days, and that's the play I'm going to make. And if it's wrong, I'll take a small loss, but I think that's a great risk-reward play.
I hope you're right.
Me too.
Thank you for coming on the show.
Thank you so much.